profit doesn't equal cash, and revenue doesn't equal being able to pay your bills. It's easier to get new clients at the right price and then turn around and increase pricing where you need to with existing clients. As you grow and develop your own skills and as your business grows, I think the confidence level also changes. You feel a lot less like an imposter.
What one key piece of advice would you like to give to all the entrepreneurs and business owners watching and listening today? Hey, and welcome to another episode of the Business Growth Show. I'm your host, Ethan Cassiotis, and today I have a powerful guest. Her name is Natalia Zacharin. She is the founder of Zacharin Consulting, an award-winning accounting firm and Inc. 5000 honoree. She partners with founders of service businesses generating between 1 million and 30 million in annual revenue. And Natalia specializes in elite fractional CFO services and strategic financial planning. She brings unmatched perspective to her advisory work, having personally scaled her own firm from a solo operation born out of poverty to a $3 million powerhouse in just 5 years. And her core philosophy is simple. Profit does not equal cash, and more sales will never fix broken systems. Natalia empowers entrepreneurs to use their financials as a forward-facing GPS rather than a backward-looking historical report by helping leaders identify silent cash leaks, optimize pricing models, and forecast decisions 6 months in advance. She turns chaotic growth into sustainable profitability, and her proven frameworks build resilient companies that operate independently and ultimately become highly sellable assets. Welcome, Natalia. Thank you for being on the Business Growth Show.
Thank you so much for having me, Ethan. I'm very excited to be here.
Yeah, you're very welcome. I'm sure it's going to be awesome and very impactful for everyone watching and listening today. And you are a successful entrepreneur. So for those people that know who you are, just introduce yourself by telling us a little bit more about you and your journey.
Thank you. And I'll be quick because my journey is not nearly as important as everybody else's journey to themselves. So just wanted to say I started in 2019 officially. I got my first client. The reason I had started the business was just a side thought of I need to make more money because I was in poverty. And it was not the first time I was in poverty. I'm a single mom. I've been single since 2012. I've been trying to just figure things out as a single mom and do my work. I have a college degree, thought I did everything right, and ended up in poverty a couple of times in my lifetime. And so 2018, 2019, I saw it coming. I was getting demoted out of my job for just the position was getting changed. And, I was turning 50 that year and couldn't find another job. So I started bookkeeping as a side gig just to make extra cash, to make ends meet. And that's how it all started.
Yeah. Awesome. What a story. And, well done for, excuse me, coming from like nothing from poverty to then that. And, I talk a lot about mindset, right? And this is a big factor in you getting to that point. And a lot of business owners, entrepreneurs have that challenge. So what do you think is some of the key mindset shifts that happened for you to get you to that point when you started to, I guess, build momentum, right, in that new business as it started to move forward?
Yes, I did have, I had just started dating he's now my fiance. We've been together for a while, but I just started dating someone and he had owned businesses throughout his lifetime. So he gave me the idea. I didn't even expect, that wasn't even an idea in my head before. I've always been a W-2 earner. Didn't think I had any specific skills to start my own business. Like I don't know how to bake or fix bicycles or anything like that, right? That's when most people start businesses. But one of the key mindset shifts, I think, was just being open-minded. And every time something didn't work out or didn't happen, it was not giving up. It was really just keep moving forward, understanding that I'm going to have, times where it's not going to be working out. And honestly, in the first year, there's a lot that doesn't work out. And there's a lot of you're just feeling like you're not making it. You can't close deals. You can't find customers. It takes a long time. And honestly, it took me 8 months to get my first 4 clients of constant and consistent outreach and looking and asking and leaving no stones unturned. And then I think I just started building momentum and started figuring out what was working. And then it started building from there. Believe me, I wanted to give up a lot of times. I still do, just like a normal entrepreneur. But I think that's the mindset mindset shift is there's another economy out there. Um, there's no ceiling when you own your own business, but there's also no stopping.
Yeah, I love that. So powerful. And I think that's what I help with my journey that I connect to. It's like somebody externally from us, right? Whether it's a partner, whether it's a coach and mentor, people around us that are like, believe in us, saying, hey, you can do this and, give it a go. And then it's just, just moving forward. Don't worry about all the failures and all the challenges. There's always so many ups and downs. I think, one saying I always like to hear is if you never quit, you always succeed in the end. So I
Yes.
think too many people quit
Yeah.
too early. So that's really awesome. And obviously having the financial background helps a lot because it's a very important skill in business that a lot of business owners don't have, right? They normally come in with a skill of some sort and they start a business and they wonder why their financials are not exactly where they should be in the business.
Yes.
So a lot of people just think, hey, I just want more leads, more clients, and just grow the business, right? But that's not necessarily going to help sometimes, depending on how the business is. So, do you want to talk about why, more sales won't actually fix if the systems are broken within the business?
Yes, and I can actually speak from experience on some of this as well. So in 2020, I started getting very, very busy. I quit my job in 2019 after 8 months. I went all in 2020, started getting extremely busy and started thinking I need to hire someone because I'm very busy. That is the wrong time to hire. I looked at my numbers because I was already reading a lot about accounting and CFO work and everything. I looked at my numbers and my numbers told me I can't afford to hire someone. And so what happens then, and how did I know that? So the first thing is, this is a service-based business. All business models are a little bit different. So if you have a restaurant, it's a little bit different. If you're a bakery, it's a little bit different. If you're a pharmacy, it's going to be a little bit different. But first, for most service-based businesses, what we're looking at is a minimum of 250,000 in gross revenue per full-time equivalent employee. And you as the owner is the first one. So if you're only at 250 or if you're less than 500 or you're not tracking at 500 yet, or let's say even 400 yet, you're not going to be able to afford someone. And so I noticed that I wasn't tracking at those numbers and I was extremely overwhelmed. So that meant I was working too much and I wasn't charging enough. And so at that moment, I did the hard thing, which was I doubled my pricing across the board to all new clients. That diminishes sales. So you have to have much better lead generation and you have to just talk to more people. And so it's become a process in the beginning of understanding like what is the pricing that you need to be at, how much time are you spending, can you afford someone? So these are all systems. Getting together like workflows and a system to get leads in so that you can change your situation. Because if you're not getting any leads in, sure, you can increase all of your prices to existing clients, and that's fine. And I've done that too. And I've had to do that, but it's easier to get new clients at the right price and then turn around and increase pricing where you need to with existing clients.
Yeah, I love it. Awesome. I love that simple ratio, right? The 250K there going, okay, well, that's how we're looking at, for key employees within the business there. So and you're right. It's so interesting, right? When you increase your prices, you normally get high quality clients at the same time as well, right? That are there because they value,
Yes.
right? Like what you're offering too. So did you find that
Yes,
helped as well in the journey on your side?
it did. And I noticed that at first I was attracting all like startups and new entrepreneurs or entrepreneurs that weren't making very much money and weren't really growing because that was who I identified with. That's who I was. And that's totally fine. And as you grow and develop your own skills and as your business grows, I think the confidence level also changes. You feel a lot less like an imposter. And as things develop and grow, you start attracting higher value clients, higher level clients. And that's just what started happening. And when we finally closed our first client, that was about $35 million in gross sales, which is still a very small business in the grand scheme of things. But that was a big win for us because at that level, they really should be hiring in-house but we have gotten to the point where we have checks and balances and great people, and so it made it valuable for them to hire us instead.
Yeah, awesome. Yeah, that's the thing, right? It's like workout partners, and you guys can be that key, financial partner for them. And yeah, I love the topic around profit and cash when I have with my clients as well, because profit does not equal cash, right? A lot of people don't
Yes.
realize this. So, do you want to talk about the differences between profit and cash, and I guess what could be, understanding about what could be leaking cash, within our business as well.
Yes. I just had a video come out, like a reel come out. How does, when do you start worrying about your bills? At what revenue level do you start worrying about your bills? And the answer is never. And because profit doesn't equal cash and revenue doesn't equal being able to pay your bills. So what we talk about is, if your financials are correct, so that's the foundation. You have to have great bookkeeping, correct financials, up to date, and you have to learn to read them at least to a certain extent. As a business owner, that is one of the levers of success, is to understand them. The second lever of success is to understand whatever that profit number is. If it doesn't equal your cash in the bank, and there's a couple of reasons why I wouldn't, then you need to take a look at why and make sure that whatever profit you have plus whatever cash you have, you can still cover all of your expenses, plus save money, plus invest, plus reinvest back in the business, and keep building up that, those cash reserves in your business. So you could have like a $300,000 profit, for instance, and only 30,000 in the bank. So why? Because maybe you pulled money out for personal expenses or distributions. That's usually where a lot of it goes. You're pulling money out of the business. It's not an expense to the business because it's a distribution. So that's part of it. If you have any debt, so loans, principal payments on loans, that's also not an expense. It's on the balance sheet. You borrowed that money, and you are usually depreciating that asset. It's usually an asset, or sometimes it's just a loan. So that's going to on the balance sheet too. So those loan principal payments are not on there either. And any old debt. So if you have old credit card debt, that's also now not going to be showing up going forward. So looking at your cash flow reports and looking at your balance sheet is actually really important to understand what that looks like and what are the requirements for cash for your business. And the other thing that could happen also is that the timing could be off. So maybe you're showing this huge profit, but you had this big bill come in, and you're categorizing it differently. Like maybe you're doing accrual accounting, and it's a prepaid expense or something like that. Well, that cash is now gone. So, so looking at all these different reports and having someone look at them with you is really important.
Yeah, definitely. I dropped out of high school, I went back to do an MBA to do the finance subjects, and I think they were the most, and accounting were the most important ones that I had to learn. And you mentioned the profit and loss, the balance sheet. There's these certain items like loans and taxes and things that are not shown right on them, and then the cash flow really,
Yes.
is the most important. So yeah,
Yes. The last thing we didn't talk about is taxes are also not expenses. So that's not your money. So whatever your profit is, you have to consider what are those taxes, because that is not your money. So you have to make enough to make sure you can cover all of that.
yeah, definitely. I'm keen to hear your system, right? Because I have a system with my clients, but how do you make sure there's enough money and the money is from a bank account perspective here? Is done well in the business so that we don't have any problems, in the future.
Yeah. I would start, depending on what your cash position is, but you can start slow. You don't have to be profitable or even have a great cash position to start in the right direction. The first thing I always recommend is to have more than one bank account, because you want all of your operations to go in one account, and you want to, at a minimum, have another account, like a savings account that you put money into, that you make sure it doesn't get spent, because if it's in your operations account, it's just going to be spent and you're not going to be able to save it. There's a lot of psychology behind money, and understanding your psychology and putting guardrails on yourself as the owner is also really important, as well as putting guardrails on your business so that money doesn't just disappear. And so every time, what I did, I opened up a savings account, and I didn't even have enough money even to, pay my own rent at the time. But every single time someone paid me, I moved $10 over into the savings account. $10 every single time. And that consistency helped me to build out better systems and better controls and put more guardrails. And so the goal is to eventually put away a minimum of 30% of gross revenue into a savings account. And that money is going to be there to pay taxes, for rainy days, to build up, cash, levels of cash, and to reinvest back in the business. Maybe even to build up cash reserves to pay off some debt faster if you have any debt, and then build them back up instead of just getting rid of all of your cash all the time. So there's lots of different strategies, but the goal is 30% minimum is what you really should be putting away and not touching. And then having that build up for 3 to 6 months worth of expenses is really important. And you can't do that if you're not profitable. So profit also has to start coming into play of how much cash do you need? How profitable do you need to be? What is that milestone of profitability? And then how can you keep increasing that profit so you can start keeping more of that cash?
Yeah, definitely love that. Yeah, I love the 30% number. That's why I was intrigued to hear it from your side. And
Yes.
yes, we and it's different all over the world, right? We have listeners, US, like where you're from, Australia from here, and everything like that. So make sure that
Mhm.
you've got enough to pay your taxes to increase profit in the business. Like you said, 3 to 6 months of
Mhm.
expenses there is really
Yes.
important. And then it's a very powerful position, right? What you can be in after that to really grow the business.
Yes. And that's for service-based business. If you have a lot of cost of goods sold, that number may be 30% of gross profit at that point. So it kind of depends a little bit on the business model. And then the goal is to actually even increase that. The goal is to eventually say 50% if you can.
Yeah,
That's the
definitely. I love
stretch
it.
goal.
Um, yeah. It's interesting, right? So for example, if you've got when what Natalia's saying about is if you've got a lot of cost of goods sold, like if you're a construction business, right? And you've got a lot of materials and labor and all these other things that go in, you probably have less profit margins than that. But you could still put a decent amount away there for everything that you need to do. So yeah, really important. Let's talk a bit about pricing because I think this is a really important one here because um, we need a lot of people that's really where it comes down to. I know you talked a little bit about, you doubled your prices before, which is great. But like, depending on the business type, of course, what do you think people should be hitting? Because that's what I see is the real fundamental, position. Once you get the pricing right and the pricing model, then everything normally flows well from there.
Yes. Of course, the pricing is going to depend on industry. I would say I look at pricing, not what my competitors are doing. And same thing, like when I'm looking at a client, I'm looking at another business owner in any industry. I don't care what the competition's doing at all. I care about, are we pricing appropriately for that business? And for what that business needs. And then how do we differentiate that business from everybody else? Because that's really the key is how are you different? Why are you different? And pricing for what you need for your business needs. Because if you're trying to be the most competitive, you're just racing to the bottom and you're going to lose. So there's really no, it's very hard to win when you're racing to the bottom unless you're really in a commoditized situation and you don't have to worry about high labor costs or high costs of anything else. But most of us have labor costs. We have, supplies and material costs. We have food costs, and depending on the industry, in most service-based businesses, I'd say it's going to be labor. So I also look at labor efficiency, and this is how we can sometimes tell if we're pricing incorrectly or if we don't have the right people in the right seats. So the problem with finance is it's never just the one thing. It's never one answer. It's always a few tweaks here and there, up and down in different respects. So if I'm looking at someone's revenue and a service-based business and their total labor cost, including contractors, if they're using them on a regular basis, including workers' compensation, medical, dental, and vision insurance, payroll taxes, and wages, And I want that business to be at about 30 to 35% of gross revenue. So all labor costs to be not more than 35%. And in some industries, it might be a little bit higher, just depends. But usually that's like the goal. And so what if you're not there? What if you're at 45% or 50%? Well, now the problem is that you have to make sure that you have either enough business to cover all of your other operating costs, or your pricing is wrong, or someone's not being efficient or productive or in the right seat on your team. And so we start looking at, I even judge it month to month, and this helps you to prepare to, when you're hiring someone, can you afford to hire someone? What will that look like in 6 months? So if you hire someone and suddenly your payroll to revenue ratio goes up to 45%, technically you should have capacity and be able to build up capacity and a lot more work and business to cover that person's salary before you hire another person. And so that's what we start looking at.
Yeah, I love that. And it's not just about pricing it right, like you said, but it's about what's the capacity and the efficiency within the business
Mhm.
there, because that's normally, yeah, the challenge, right? With a lot of people
Yes.
there is they're not realizing that we can do this better or faster or anything like that, yeah, within the business.
Yeah. And I would look at um, doing even an audit of time, a time audit of what everybody's working on, how much are they working on, different customers or clients, what does that look like? Because maybe your really inexpensive clients are taking up more time than you think they are because they have a lot more questions. And so you have to really be careful about how you're pricing and what they're getting for that. Doing a time audit or having your people even clock in and put down like how much time they're working on certain projects is a tremendous amount of information that could be really helpful.
Yeah, definitely. And is it just something simple on a spreadsheet, or is there certain softwares and stuff that can help, like with that sort of side of things?
Yes, a lot of workflows already offer that. It depends if you have a workflow situation. So we have software that we use as a workflow, so we can see, what projects are we working on, what reports have gone out, who's working on them. I can get a lot of data, and also there's an opportunity there to plug in the time you worked, for which client, what were you doing for them, and how much time that happened. But if you don't have a workflow system, even if they put it on a Google Sheet, we actually used to do a Google Sheet, and it worked out really well in the beginning because we didn't have that many people yet or that many clients. Now that would be too complicated. But even if it's just a Google Sheet, like just getting that information is really could be really valuable to make sure that you know which clients or which customers are taking the most of your time.
Yeah, I love that. Keep it simple and understand it. Then you can go, okay, well, yeah, what do we need to do? Or why is this taking this long? Or, okay, let's
Mhm.
maybe not focus on this client as much, get other clients. Yeah, all of
Yes.
those things.
And if you find that some people are focusing on clients and you're not getting paid appropriately for that, then that's a training issue. Maybe they're not in the right seat. Maybe they don't have the correct training, or maybe they need training for something called scope creep. So maybe the client is asking them more questions about stuff that isn't really in their service package, that now you have an opportunity to upsell that client.
Yeah, definitely. Love it, right? There's always ways to make money in different ways, right? And increasing pricing is only one of them in that area
Mhm.
there.
Yes.
If you can upsell and other things, then yeah, a lot better as well to include that. What one thing that I metric that I hear a lot about that just came to me that I'd like to know your thoughts is around lifetime value of clients.
Mhm.
So, do you want to talk a bit about what lifetime value is and importance and yeah, all of that?
Yes, in the majority of service-based businesses, if you have a recurring model, like a subscription model, even if it's not a true subscription model, even if you're just charging them by the hour, but it is a monthly recurring or a weekly recurring or it's some kind of recurring model, that you have clients that are ongoing, this is really helpful. So understanding what the lifetime value, what does that mean? So you take your client, when did they start with you? How many months have they been working with you? And what was the total amount of money that you've collected from them? And that ratio gives you a number. And so now you can compare those numbers against other customers that you have And then you can compare what your average is. And then but the important thing is to see, is that average going up or down? Because in finance, it's not where you are right now, it's the trend. So are you trending in a direction where the lifetime value is decreasing? If the lifetime value is decreasing, two things might be happening, well, maybe more than two things, but definitely two things that come to mind. The one thing is you're losing clients. So now you need a list of why. Why are you losing clients? What happened? What did they say before they left? Are you trying to re-engage them? Did you try to, do you have an issue somewhere in the business? The other is that maybe your pricing has gone down. So you want to see, are you making less money with clients that have been staying with you just as long? So is the average going down, or is it going up? If it's going up, that's great. If it's going down, that's not good. You want to take a look at that.
Yeah, definitely. I love that. Looking at what's how it's trending, and I think one thing that I noticed, like especially because in Australia here, the middle of the year is the financial year change, and so a lot of wages and things go up, and a lot of people forget to like increase their prices right at that time,
Mhm.
and all of a sudden you're like, oh, wait a minute, all my labor and stuff, has gone up, but if you don't increase your price, then that's a reason, right? While you could be trending
Yes.
down because you're not changing the price. Yeah.
Yes, it's so interesting that I'm glad that you mentioned that because what I'm seeing is a trend for 2026. I saw this beginning of 2025, then it let loose a little bit. And the advantage of being a CFO for multiple businesses and looking at people's financials is that I start seeing trends of what's happening in the economy. And a lot of that comes is obviously I'm in the United States, so a lot of that comes from the United States economy, but the economy is very global. And that global economy is really what's pushing everything. And so last year, we had that whole tariff debacle going on constantly. And so when businesses know that when they know that they have to deal with something, business continues because they figure it out, they pivot, and they keep moving. If it's in the unknown, then they stop and business kind of starts to slow down. And so that's what was happening in 2025. Things started kind of shutting down, slowing down, just not moving. And a lot of people's revenues, a lot of business revenues were just flat last year. Meanwhile, costs are going up. Labor's up. Your payroll is more expensive. Your fuel has gone up. And now we're kind of seeing a little bit of that now for 2026, where revenues are flatter. Sales are not growing as quickly as they were in 2024, for instance. And costs are still increasing. Food costs are increasing. Insurance costs are increasing. Like everything's increasing. And so there's a squeeze. And if you're not increasing your pricing or reducing some of your costs, you're going to feel that squeeze. And then I wanted to say something about reducing costs because I don't like it when people are like, "Oh, I just reduced that cost. I got rid of my software that was costing me a lot of money." If something is costing you money, but it's making you more efficient, more streamlined, more automated, if it's really helping you or just making work more pleasant, then it has a return on investment and you should keep it. If it's not giving you a return on investment, then dump it or exchange it for something else. Same thing with people, because a lot of times business owners will start hiring less expensive laborers or less expensive employees. The problem with that is they're usually less efficient and less productive and they have less experience. So you're actually not improving your profit. You might be doing the opposite. Sometimes the more expensive person or the more expensive software is actually what increases your profit.
Yeah, I love that. So true. Don't just cut things. It's like understand what's going to keep you efficient and help you grow to that next level. And also, I find so big on systems is understanding the systems you're getting and make sure they're scalable as well. Because some people go for the cheap free systems and then they're stuck in that. And they're going, crap, oh, it only gets us to a certain level. So make sure you've got, someone key, whether it's in your team or some people to help you to go, okay, is this going to actually help me in my business in the long term too? I think it's really important.
Yes, that includes your bank, your accounting software. Like work with someone that you grow into, not someone who will keep you small. So,
Definitely. Completely agree
yes.
on that. One other thing I think is important, I like your take, is around billing by time, like hourly billing and things, right? And I see this a lot with my clients. Are like, oh yeah, but we just charge per hour and that's all it is. I'm like, no, you shouldn't be doing this necessarily. So I'd love to hear from your perspective of the problems with it and how we could be charging differently.
Yes. So we do not charge by the hour. We charge a project fee for like having a project, like we're catching someone up. For instance, now it's June. Someone comes to us and says nothing's been done since December. We have a project fee, and then it's monthly recurring. And I love monthly recurring because it helps to plan a lot better. Of course, there's always caveats with everything. You have to understand what the how what the scope of work is, how much time it will take. You have to understand what that looks like and who you're going to need to do that in order to be able to do monthly recurring pricing or to do any kind of flat fees. So will you always get it right? Probably not in the beginning. That first year I didn't get it right at all. Right? And sometimes you have to tweak that, but that's okay as long as you know it's easier on your customers to understand like this is it, this is the flat rate that we're charging. Then they know there are no surprises. Make sure that the engagement is very detailed so that your client understands what your scope is and when something is outside of that engagement, because you don't want scope creep, like we were talking about earlier. But it does help with planning. So now, if you have a recurring model, or even if you have a flat rate model, you have a really good idea of what your average is for your client. So now you know how many clients you need, what is that average, when do you need to hire, and you can make it more predictable. It's never going to be 100% predictable, but it really helps you to engineer backwards where you want to get to and what your profit looks like.
Yeah, definitely love that. And let's talk about forecasting now, because I think this is a big topic that I do a lot of my clients, especially on the cash flow side. I think that's the biggest thing why businesses fail is because of cash flow. They don't know how to do it. So, can you talk more about forecasting and having that, forward-facing sort of GPS that helps us on our journey?
Yes, I love forecasting. I feel like it is literally a crystal ball. It's magical. Um, what is it? It is taking the information, the historical data, month to month over the last year or so, and then projecting out what's going to happen next. The more you have a model that's recurring, the easier that is to project. Some models are not recurring at all. Like we work with oil and gas drilling companies sometimes, and that is completely unpredictable. So there we're just trying to predict cash and how long cash is going to last until they have their next big project. So what you want to know is your fixed expenses. What are your recurring expenses? Utilities, rent, software fees, dues and subscriptions. Sometimes even payroll could be pretty fixed if you're not charging, if you're not paying people by the hour, but you're paying them salary. So you can get a pretty good idea of what your costs are. Then your variable costs, especially if they swing. So if you have like a really big bill coming up, or you're going to give out a bonus to your people, or that you're all going to be working on a project and your hourly employees are going to be working overtime and double time. And so you can start predicting some of the variable costs as well. So now when you have all of your cost of goods sold, your operations expenses, your variable costs, and you have an average, now you have an idea of how much you have to make to cover all of that, plus build out your profit. So what we do is we create, I love doing it in Excel because I can touch it better than a software. I don't like just connecting stuff because I don't feel like I can really put the scenario and I can't really see the numbers and really get as granular as I want to. But so I usually like starting it in Excel and then I convert it into software to update it. But we create projections like if you're at $1 million, you want to get to 2 million. What does that mean, taking into consideration seasonality and your average cost per client and how many clients you need? What does that mean? And how do we map that out? And that's where it starts. And then we start mapping out all the other expenses. And if your profit is low, what we want to do is keep mapping things out where we're increasing your revenue slightly and decreasing your expenses, or your expenses stay flat and keep increasing your revenue. So we keep improving profit. And then we start also forecasting like what's left over in your cash after you're paying off all your bills and your projects and your loans and everything. So we can now see, are we improving month to month? Like, did we hit those goals in all those different departments, and all of our goals for revenue and profit and cash? If we didn't, why? what can we change so it gets better. But also what we can see is if we make this change right now, we hire another person or we invest in something in 6 months, are we going to lose money? Because sometimes there's like what we call like a profit leak or an expense leak. Sometimes it's not obvious. It's very gradual and you can't tell. And then suddenly in 6 months, you're like, I'm out of money. What happened? This way we can see before you're out of money so that now you have time to pivot, make changes, not do something or do something differently, or even, if at the absolute worst, fund the business. So, but it is truly a crystal ball.
Yeah, I love it. And I love that you said Excel as well. I love Excel too. And, a lot of people are trying to do it automatically in these accounting systems, but you can't put these scenarios and stuff in there, right? I think that's the power of it. Like you said, I think that the simple one is hiring an employee. Okay, if we're going to hire this person,
Yes.
what do the numbers look like? And it's also not just the cost side, but it's also the capacity side, right? As well, going,
Mhm.
well, that means we can hopefully charge more because we're selling more or whatever it is that we're doing there. So what does that look like, from all the
Mhm.
elements within that business, right?
Yes. And you can do ratios and percentages like we were talking about, like the 35% labor ratio. Are you on track every single month? Are you doing advertising, marketing, and sales? We don't want to spend more than 10 to 12% total of gross revenue on advertising and marketing. And we definitely don't want to spend that much if we're not seeing an increase in revenue. So, like seeing all those percentages and those ratios are really important because now and graphing them out. That's the other thing about projections. I like graphing them out because now it does something differently to your brain. You're not just looking at black and white numbers on a screen. You're looking at color and seeing, is it going up or down, and what does that mean? And is it on track with the target? And that does something different to your brain, and it really helps the business owner. It really helps you to understand. I'm here. I want to get to, from point A. I want to get to point B. Am I trending in the right direction to get to point B, and how fast can I get there?
Yeah, exactly. Love it. And let's talk just quickly around like, okay, there's key software in the US. QuickBooks is a big one that I know. In Australia here we have like Xero and Myob and things like that, right? And there's obviously others out there. But I guess that's just having a good, accounting bookkeeping system there, right? And you can run the reports. But I guess what I see is important. I'd love to hear from your perspective is having like a dashboard, right? Is going, well, what are we looking at with our numbers here, especially this other stuff that you've got going on in the background. So what are your thoughts around dashboards, Excel software, whatever, what's important to showing them to be able to make decisions?
Yes, we actually, for our fractional CFO clients, we use an additional software that we connect to QuickBooks Zero actually works with it as well. And I think it's actually an Australian company, Fathom HQ is who we use. That software is extremely customizable. You can create your own customized KPIs, ratios, non-financial information in there, including financial information. So now not only do you have your profit and loss in your balance sheet, but now you have graphs. So we can see, like how many marketing qualified leads did we have compared and like month over month. And we can see, are we going up? Are we going down? Is our cost per lead? Which is another really important metric. Is our cost per lead going up or down? Is our client acquisition cost? What is that looking like over time? And it'll go up and down, but is it trending over 6 months? What does that look like? If it continues to go up, there's a problem. You're spending more on marketing and sales and you're getting less clients. And that's an important metric to know. Same thing with LTV, lifetime value, which we talked about earlier, average value of customer. So there's a lot that you can graph out, and that starts making all your dashboards. And how did your revenue compare this year compared to same time last year, compared to last quarter, compared to 5 years ago, same month? Those are really interesting metrics too, because one thing that I'll say about being an entrepreneur is you never feel like you're doing well. You always feel like because you're handling all the biggest problems all the time. And one of the nice things is sometimes to look backwards and see, oh, I didn't really have that great of a year so far, but I have double the amount of cash that I had last year. That's kind of a fun thing to look at.
Yeah, I love it. It's looking like you said at the ratios or how much you've got in the end, because it doesn't matter, yeah, if you've whatever happens in other metrics, but if you've improved in some ways there in fundamentals,
Mhm.
then yeah, it's very powerful. So I like that. One interesting question I want to ask is around AI, because AI is
Mhm.
doing a lot right now. Everyone knows ChatGPT, Claude, all these other things. What are you seeing out there? Because I guess with you guys using it, or with your clients and things like that, how you see it changing the way of in the financial elements of business.
Yes, I am seeing first just the regular softwares, the accounting softwares, and other, workflow softwares using AI a lot more. And so it's actually making work more efficient and more streamlined. So I know, for instance, for us, we use technology a lot, and I don't plug in things into AI right now because a lot of my software already has that. But we use technology a lot, and so the average um, team member, full-time employee on my team can handle about 30 clients, 30 plus clients. The average team member for an accounting firm that we call brick and mortar accounting firms, they still use a lot of desktop and they've been around a really long time. They can handle about 10. So we're already 3 times more efficient than the average accounting firm that's older. Now there are even firms that are even more efficient than us. Why is efficiency important? Because we're now have an opportunity, instead of focusing on data entry, we're now focusing on value, on what's important, the graphs, the fractional CFO, the analysis. And so what I'm seeing with AI is it's not taking away the jobs, it's improving the jobs. So now you're actually going to have to understand accounting and bookkeeping on a higher level, probably to stay employed, because AI is not going to always know the difference between like an owner investment and money coming in as revenue. It'll be kind of hard for it to sometimes tell that. AI it can't see fraud. It can't determine if someone is putting in wrong information or if they're lying. And we've caught all those things actually in analyzing financials. So it can't detect a lot of those things, but it can speed a lot of the other process up. So now a human being can come in with their level of experience, seeing patterns, understanding human psychology, understanding mindset, and understanding what it's like to run a business. Now they can come in and improve that, and just be even more efficient and see it faster. So that's what I'm kind of thinking it's going.
Yeah, I love it. And I think that's the same what I say about people. It's how can we make your business like double, triples efficient, like what you're saying here, right? 3 times as efficient with the same amount of team members, and you're not doing the boring stuff. You're doing the more
Mhm.
higher level stuff, and normally that's more interesting, right? As well, and value adding there. So it's just,
Yes.
I think it's a win-win for everybody to be on top with AI, to embrace it. It's here. It's not going anywhere. It's just going to be getting improving and going faster. And whether you're a business owner like everyone here, it's important for you and your team, or whether you're an employee or working for someone or contracting to someone or however that works, consulting. It's like make sure that you're embracing that to add more value.
Yes. I think it's really going to save money. It's going to save on labor costs. It's going to save on, we're already remote, so a lot of us get to save on rent. A lot of storefronts that are now completely remote. Like, remember, I don't know if you remember, 10, 20 years ago, I think it was like 20 years ago, or a little bit more, no one could sell anything unless they had a store and someone was physically in that store. Well, look how much that's changed. So it's going to give us more opportunity to see things, to be exposed to a lot of things a lot faster, and to save money on some of those costs. And so we're just going to have to figure out how to use it safely and continue to use it safely, and just continue to keep an eye on it and see what's going to happen next.
Yeah, definitely. Yeah, love that. Awesome stuff. And yeah, you've shared so much gold with us here today. And I guess as we're starting to wrap up here, Natalia, what one key piece of advice would you like to give to all the entrepreneurs and business owners watching and listening today?
Well, because I'm an accountant, I would say the first piece is to really make sure that your financials are up to date and accurate, because we see about 85 to 90% of new clients who come to us have wrong financials. It's just not done correctly, and no one is overseeing that. They have, anybody with a computer right now says they're a bookkeeper. And so to just be really careful to make sure that they have a team behind them, they have controller level services, that someone is making sure it's accurate and looking and double checking everything. So having checks and balances is really important. That's the first thing, is that's the foundation, and understanding the financials and making sure that you have those. The next is, we talked about this a little bit before we started, having a mentor, a mastermind, a coach, a CFO. Those are all a little bit different. You can have all of them because they all do things that are a little bit different. But pick and choose and make sure that you're not doing this yourself, because someone has the answers to your problems, and you can get from where you are now to where you want to go much faster with help. I'm a huge advocate of coaching and masterminds, and we work with a lot of clients that have coaches and where their CFO and their coach, and we get on a call together because we all want that business owner to be successful, and we all have something different to help them with. I think the last thing is never stop learning, and don't be afraid. Don't be afraid of AI. Don't and practice gratitude and be happy. And I think that every business owner will have a lot more success if they do it through gratitude and happiness and love, rather than through I just want I'm mad at the universe and I'm just gonna have this chip on my shoulder, I'm gonna make it work. That only goes so far, and then you start burning out. So doing things with gratitude and love is actually the best way to run a business, because you can build a fabulous business and be happy.
Yeah, definitely. So many amazing points there. I love it. Completely agree with all of those, especially on getting other people to help you, coaches, mentors, advisors, consultants, partners, all of these people in here. Because yeah, why take 10 years of struggling? It would take you 1 year or 3 years, right? With the right help to get you to where you want to be. And then you can enjoy it a lot more, right? And enjoy the journey
Yes.
with gratitude and love and all of that, which is the amazing part. So really awesome. And yeah, we connected through our networks. We learned about your awesome journey from being a single mom earning $7 an hour to now being the founder of Zacharin Consulting and INC 5000 honoree. You're an amazing woman, so knowledgeable, and it's amazing how far you've come, and how much you're impacting businesses, because I think this financial part is the most important part. People don't realize that, right? And unless you have someone on your team, whether that's internally or externally, helping you with that side of things, you're very likely to be a failure in business. So get the right people
Yes.
on board. And you're one of these people that I can tell your stuff, because I learned with my MBA and stuff like that as well. But you've gone down that route, and all these tools are really important. So well done for doing what you do for business owners. I'm sure you continue to build resilient companies that operate independently and become highly sellable assets. Very grateful we connected. Look forward to partnering as well. So Natalia, how can people find you and get in contact with you?
Yes, we actually have a special page for your audience. It's under www.zacharinconsulting.com/BGS for Business Growth Show, BGS. And there you'll find a couple of downloads. So you can get 7 ways to find money in your business now, and the ultimate checklist for financial success. There's also a calendar link if you want to chat with us. And then there's a lot of other resources actually on the website as well. We have a profit playbook, we have a cash flow forecasting tool, and we have lots of blogs and articles as well.
Yeah, awesome. Sounds very amazing. So definitely go to that link, everybody. Find the website, go to all of those, and we'll chuck in Natalia's social media details as well in there if you want to connect directly. So yeah, really powerful. All these tools are amazing. Highly recommend you get into them. It's been a pleasure interviewing you, and thanks for being on the Business Growth Show.
Thank you so much for having me. It was a pleasure to be on too.
Thank you for watching and listening to the Business Growth Show, where we talk about everything on business growth. And please like, subscribe, and leave us a 5-star review. You can find me on LinkedIn, Facebook, Instagram, and YouTube as Ethan Casiotis, or visit my website, ethancasiotis.com. And if you want to grow and scale your business, you'd reach out to me on any platform to see if we're a good fit. So until next time, remember that our business grows where we learn skills and take action using them in spite of fear. So let's create wealth and freedom together.